Good morning, you magnificent melonheads. Today is Monday, February 13th, 2023. A new week is upon us. I hope you all enjoyed the Super Bowl yesterday. I did not catch one single play of football through the entirety of the season. I'm pretty much done with the NFL. That's just my thing, but I hope you guys enjoyed it. So right now, everybody is just worried about CPI. Well, CPI and aliens. Okay, see, aliens became a thing over the weekend. Apparently, it was a big weekend. But CPI is really what's driving markets right now. The market really shrugged off the prospect of an alien invasion. You guys are handling this really, really well. Well, let's touch on that real quick. Simple thing, right? First of all, you got to love the 2020s because in the 2020s, you've got the average person is now saying the truth is out there. The aliens could be real. And you've got all the conspiracy nuts are saying, you're kidding, right? You really believe the government lies that it's aliens? You have got to love the 2020s. How this traditional narrative has been so flipped on its head, and now it's the normies are screaming aliens. And the conspiracy guys who have been right for most of the 2020s, they're the ones saying, don't believe what the government is telling you. They're lying to you, telling you the aliens are real. Which, by the way, let's say, entertain for a minute that they are real. We're supposed to believe that they crossed interstellar distances to arrive at Earth, faster than light travel, and all the energy requirements and engine technology that would require and shielding. And then they get here, and their preferred method of atmospheric flight is balloons. Like some kind of interstellar atmospheric jellyfish just floating in the air. Makes total sense to me, right? You know, they can travel faster than light, cross interstellar differences, but then they get here. All right, guys, deploy the balloons. Makes sense. Makes total sense to me. Moving on as fast as humanly possible from the alien story, let's talk about CPI and let's shrink my melon of a head and what's going on in markets right now. The S&P is up 8 entire points or 0.2% at 4,097. We got the Dow Jones Industrial Average is at 33,916, up about 47 points or 0.14% right now. And the NASDAQ is up 50 points or 0.43%. at 11,769. So the NASDAQ leading the way higher this morning. That says risk on to me. Shout out to Mr. Charlie Bilello. I hope I said that right, Charlie. Over on Twitter, he posted this chart this morning. I got a real kick out of this one, and Mish found it. Thank you, Mish. He says with 79% of companies reported, the S&P 500's Q4 GAAP earnings are down 23% year over year. And that is the third consecutive quarter of negative year-over-year earnings growth and the largest decline since that second quarter of 2020, which you remember was a rather doo-doo quarter. So 3 consecutive quarters of negative earnings growth in the S&P 500. What does that sound like to you? Sounds like the R word, doesn't it? And also got to keep in mind that the big companies, the big publicly traded, the S&P kind of companies, they captured huge amounts of market share while all of their smaller mom and top competition was forced out of business by the lockdowns in 2020. So considering the fact that the publicly traded corporations have a bigger share of the economy now and that their earnings are down 23%, and that's the third consecutive quarter. Yeah, this recession already very much underway. How do you get economic growth when 79% of your S&P companies have 23% declines in year-over-year earnings? That is not economic growth. So shout out to Mr. Bilello. Charlie, I really hope I'm saying your name correctly. I apologize if I got that one wrong. And thank you, Mish, for finding that one this morning. Also, over here in the bond market right now, looks like we got a mixed bag. Not a whole heck of a lot happening. We got the 6-month Treasuries up by 1 basis point. The 4-month sitting at 4.84, up almost 6 basis points this morning. Even though the 3-month is down, bond market's kind of all over the place this morning. The U.S. 10-year sitting at 3.74%, pretty much flat on the day. And take a look at this chart of the U.S. 10-year yield right now. This one's kind of important because, well, look what we got going on right here. Looks like we got a breakout from this declining trend that started back in October. We recaptured the 50-day moving average. We came down and retested, and now we're moving higher again. So keep an eye on this one, folks. And another reason why I mentioned this is this trend here, these couple weeks in a row of these declining interest rates in the 10-year Treasury, that has led to some credit creation, more debt creation. And the reason I say that is because we have CPI coming up tomorrow. And debt expansion means more inflation. It's one of the biggest inputs to inflation. We saw a surge in January of used car prices. We saw a surge in refis and mortgage applications, all brought on by these lower rates. So I'm starting to hear whispers from some pretty bright people in FinTwit saying, hey, we might actually have a surprisingly high CPI print tomorrow. Everybody's forecasting lower. Are we being set up for disappointment right now? Well, lower interest rates spurring credit growth that could have led to a little bit of stealth inflation for the month of January. Also, take a look at the consumer credit. We had a little surge. Look at these few months here. Even though we were flat for most of November and December in consumer credit growth, we had a big uptick in January. So very much possible that we get a surprise tomorrow to the upside, although we have those changes to methodology are coming out that could take us right back down. And also looking at this, speaking of that 10-year interest rate, check out the spike that we had last week in mortgage rates. These last couple of data points at the end of the chart here, where we went at the end of, that is February 2nd, we were at 5.99% as the average 30-year mortgage rate in the U.S. And then the latest data point we have on the 10th, we are back up to 6.5. Substantial move up, very quick, very sudden at the beginning of February in mortgage rates. So these stories about a sudden spike in refinances and, mortgage applications are up big time week over week, those stories are probably going to dry up very soon because we saw a pretty sharp move up last week in interest rates on mortgages. Looking over at the U.S. dollar, it is relatively unchanged, been bouncing around a little bit this morning, currently at 103.61, down 2 basis points this morning. Not a real big move in the Dixie at the moment, but another one that I want to look at over here because we had a little bit of a technical breakout going on in the DXY. We've had this declining trend for a couple of months now after a peak last fall. Now we have recaptured the 50-day moving average and moved above it. So I'm still looking for a retest on that 50-day line. But this could be an indicator that the Dixie is heading higher. Stronger dollar, usually not good for stocks and asset prices. Sliding on over into the commodity space, we got gold is down about $8 this morning, or 0.5%. Silver is down almost 20 cents, or 0.89% at $21.87. Silver below $22 now, having a rough go of it this last week or so. Crude WTI is at $79 right now, down 75 cents, or about 1%. And natural gas at $2.43, down 7 or 8 cents right now, or about 3%. Let's take a look at the natural gas chart. We were right there. We were finally above the 9-day moving average on that natural gas chart. I know a lot of you have been waiting for that trade. Back below it this morning, and again, I am waiting for a full green candle above the 9-day moving average before I do any trades in natural gas. So still not time. I am still not pulling the trigger on the natural gas trade, even though, man, this has been just an absolutely brutal winter for natural gas traders. Still being patient on this one. Also on that front, I saw this story this morning. This one's important. Natural gas flows to Freeport's LNG Texas export plant jump, according to Refinitiv data. And I just wanted to show here, gas flows were on track to reach 500 million cubic feet per day on Monday, up from an average of just 34 million cubic feet per day on January 26th through the 11th, according to data from Refinitiv. So this is the big LNG plant in Texas that had that fire last year. They've been shut down for months. There's been a lot of back and forth with the government about will they restart, when will they. So this is up to 2 billion cubic feet per day of natural gas demand here in the States that is starting to come back online. It's only up to about 500 million cubic feet now. But if this plant does return to full capacity, that's 2 billion cubic feet per day in natural gas demand that's going to be coming back online. U.S. natural gas production is about 95 billion cubic feet a day. So we're looking at 2% additional demand coming back online here. So that could absolutely move the needle on these gas prices. Remember, it's at the margin where price is determined. So even a 2% surge in demand could really move to an outsized move in price. Keep an eye on that Freeport plant and the natural gas trade. Elsewhere going on in the world, we have got Binance received notice today. Stablecoin backer ordered to stop issuing token. And this is the SEC's crackdown on crypto continues. New York's chief financial regulator has ordered Paxos, the company behind the stablecoin of major crypto exchange Binance, to stop issuing the token. Paxos and the regulator said in separate statements on Monday. If you didn't know already, Paxos is a U.S.-based company and they actually issue the BUSD or Binance USD stablecoin, even though Paxos issues it and they operate it, and then Binance does whatever Binance does with it. Well, no more. Paxos is no longer able to issue it, which means the coin is just going to slowly be burned until it's gone. The Binance USD stablecoin, one of the world's biggest, is issued and redeemed by New York-based Paxos Trust Company, both of which are regulated by the New York Department of Financial Services. So this crypto crackdown is continuing pretty substantially. Moving on from there, check this one out. Revisions show U.S. consumer prices a bit firmer than previously reported. Uh-oh. What do you mean? Which part? This article came out a few days ago. Not much fanfare, not much headlines, but U.S. monthly consumer prices rose in December instead of falling as previously estimated, and data from the prior 2 months was also revised up. So they went back and they revised up the CPI prints from the last 3 months. All three of them went higher. Didn't get a lot of headlines on there. What? Wait. I mean, all the victory laps that the politicians took and all the self-congratulatory statements by the Fed. And now 3 months later, they come back and they revise the numbers upward. Uh-oh. Consumer price index edged up 0.1% in December rather than dipping 0.1% as reported last month. The Labor Department's annual revisions of CPI data showed on Friday. Data for November was also revised higher to show CPI increasing from 0.2% instead of 0.1% as previously estimated. And October CPI rose 0.5% instead of the previously reported 0.4%. So some stealth revisions to the CPI data coming out in the last couple of days. Keep an eye on that one. Are we being set up for an inflation surprise? I don't know, folks. I just don't know. And I saw you somewhere in there. I want to send a shout out to Mr. Mike Binder from Robin RC Models. Thank you, Mike, for the super chat, sir, and supporting the channel. He says something really bad is going on for them to be pulling ET out of the drawer. CPI, all will be wrong again. Up till April, they really will hit. Well, I was going to do a video over the weekend. I just couldn't get to it. I was too darn busy with the kids and the yard work this weekend. But I do plan on doing a video about the revisions to CPI. I'm going to try to get that one out this afternoon before CPI tomorrow, because tomorrow is the new methodology, and there are some subtle changes coming on that I think they're going to lower CPI, but at the same time, that surge in credit expansion in January could send it back up. It's going to be a tough CPI to guess this time around. But yeah, I agree, Mike. I mean, if they're talking about ET, if the government is entertaining the notion of aliens being real, what are they possibly distracting us from? And it's the 2020s. It could be something pretty wild. Anyways, this decade, it's not always fun, folks, but it is never dull. Thank you very much, Mike Binder, sir, from Robin RC Models. Appreciate the super chat and the support of the channel. Thank you very much to my Patreon supporters, guys. I appreciate everything you do for the channel. Link down below in the description should you feel so inclined. Hi, Mom. Hi, Dad. And until next time, live strong, live small, and dream big.